Money, power, and control are changing in front of our very eyes. As you are undoubtedly aware if you have been following the cryptocurrency market, a significant event has occurred. An executive order signed by President Donald J. Trump on January 23, 2025, has completely upended the financial industry. This action represents the first significant acceptance of cryptocurrencies, but not just any cryptocurrencies, by the US government. This has nothing to do with the takeover of central bank digital currency, CBDC. This has nothing to do with governments cracking down on cryptocurrency. No. This relates to the top 4 cryptocurrencies that the Trump administration is currently emphasizing in its economic strategy: Bitcoin, Ethereum, XRP, and Solana. What exactly does this executive order signify, then? How will it affect conventional banks, the cryptocurrency market, and the very nature of money in the future? Due to unclear legislation and a lack of institutional support, the Bitcoin business has been enmeshed in uncertainty for years. The purpose of this executive order is to alter that perception. The administration is urging prompt and decisive action by requesting a review of all crypto-related regulations within 30 days and complete recommendations within 180 days. The government's rapid approach to integrating digital assets into the larger financial system is highlighted by this ambitious schedule. The establishment of the Presidential Working Group on Digital Asset Markets is a key component of this executive order. Senior administration officials and important financial regulators, such as the Attorney General, the Secretary of the Treasury, and the leaders of the Commodity Futures Trading Commission, CFTC, and Securities and Exchange Commission, SEC, make up this high-level task group. Developing a federal regulatory framework for digital assets, including stablecoins, and assessing the establishment of a strategic national digital assets stockpile are the group's mandates. The administration's dedication to a comprehensive and well-coordinated approach to digital asset regulation is demonstrated by the involvement of such notable individuals in this working group. It also shows an understanding of the necessity for the US to establish its dominance in this new field and the growing significance of cryptocurrencies in the global financial system. This executive order's direction to investigate the establishment of a national digital asset stockpile is among its most innovative features. By using seized assets to increase national reserves, this action might establish the US as a major force in the cryptocurrency market. The US government currently owns a sizable quantity of Tether, Ethereum, and Bitcoin, roughly $20.9 billion. The government may improve its financial position and have a major impact on the cryptocurrency markets by formally designating these holdings as a strategic reserve. Several important problems are brought up by the possible creation of a national digital asset stockpile. How would a reserve like that be run? What standards would be used to decide which digital items should be included? Most importantly, how would this stockpile be used to further the interests of the country? The Presidential Working Group's upcoming suggestions will need to handle these complicated concerns. The executive order expressly forbids the establishment of a central bank digital currency, CBDC, in the US, which has shocked many observers. The strategy used by a number of other significant economies, such as China and the European Union, which are actively creating their own CBDCs, is obviously different from our decision. The administration's preference for decentralized digital assets over centralized digital currencies is demonstrated by the ban on a US CBDC. It shows a commitment to avoiding the possible drawbacks of government-controlled digital currency as well as a confidence in the importance of market-driven innovation. This position is probably going to have a big impact on how digital payments develop in the future and how the Fed functions in the changing financial system. The presidential order also contains clauses designed to hasten institutional investors' acceptance of cryptocurrency. The administration intends to encourage hedge funds, pension funds, and other institutional actors to expand their exposure to digital assets by developing a supportive environment and offering regulatory certainty. The cryptocurrency markets are anticipated to be significantly impacted by this drive for institutional adoption. Large financial institutions' increased involvement may result in more liquidity, lower volatility, and higher prices for the most valuable digital assets. Additionally, it might open the door for the creation of fresh financial services and products, further incorporating cryptocurrencies into the established financial system. The executive order suggests tax benefits for corporations that have cryptocurrency on their balance sheets in an effort to entice them to embrace digital assets. Promoting the use of digital assets as a valid and beneficial part of corporate treasury management is the goal of this program. The administration wants to encourage companies to use cryptocurrencies for value storage, investment, and payment by providing tax advantages. This might result in a wider acceptance of cryptocurrencies as a valid asset class, more integration of blockchain technology into corporate operations, and a larger adoption of digital assets in commerce. President Trump's executive order is a daring and assertive move to include cryptocurrencies into the structure of American finance. It encourages a more dynamic and inclusive financial environment by pushing established institutions to innovate and adapt. The financial future has arrived, and it is the responsibility of all parties involved to welcome this shift with courage and vision. But there are drawbacks to this forceful entry into the cryptocurrency space. Traditional banks, who have long been used to playing a pivotal role in the financial system, now face the possibility of being disrupted. The presidential order's prohibition of a central bank digital currency, CBDC, in the United States emphasizes a preference for decentralized assets over centralized digital currencies. Banks now have to change or face becoming obsolete. Blockchain technology must now be integrated into banking processes. It is no longer an option. To satisfy the changing needs of their customers, financial institutions must devise plans to include digital assets in their portfolios and provide services pertaining to cryptocurrencies. A calculated strategy to negotiating this complicated terrain is demonstrated by the formation of a crypto working group headed by individuals like David Sacks. This group's responsibilities include analyzing stablecoin laws and determining whether a Bitcoin strategic reserve is feasible. These kinds of programs might offer the steadiness and certainty that investors have long desired. Critics can contend that the quick adoption of digital assets brings with it new dangers, such as security issues and market volatility. But the alternative, which is to oppose innovation, is more dangerous. The United States needs to take the lead in the changing global financial system or risk falling behind. To sum up, the executive order issued by President Trump is a daring and assertive move to incorporate cryptocurrencies into the structure of American finance. It encourages a more dynamic and inclusive financial environment by pushing established institutions to innovate and adapt. The financial future has arrived, and it is the responsibility of all parties involved to welcome this shift with courage and vision. The future of the U.S. financial system is clearly Bitcoin, BTC, Ethereum, ETH, XRP, and Solana, SOL, as stated in President Trump's executive order. These four cryptocurrencies were not picked at random. Each has a distinct function in upending established banking and changing global finance. A new era of cryptocurrency use, regulation, and investment has begun with this ruling, which formally acknowledges these digital assets as strategic financial instruments. It's an obvious message. Bitcoin is a national reserve asset and the next digital gold. Decentralized finance, DeFi, is built on Ethereum. The bridge currency for immediate international transactions is XRP. The high-speed network for financial applications of the future is called Solana. This isn't your average policy choice. This is a whole financial revolution that will change banking, business, and the way money is structured. More than 10 years have passed since Bitcoin was dubbed digital gold. It may now formally join the U.S. financial reserves as a result of this executive decision. Bitcoin, a huge untapped resource that may be incorporated into the national economy, is already worth approximately $20.9 billion to the government. Following previous actions, Trump's executive order requires the investigation of a national Bitcoin reserve, similar to countries like El Salvador. Institutional trust in Bitcoin would rise if the United States formally accepted it as one of its strategic financial assets. Additionally, stimulate significant investment from hedge funds and corporations and position the United States as a pioneer in Bitcoin-backed financial stability. One of the key characteristics that makes Bitcoin resistant to inflation is its constant supply of 21 million coins. There just won't be enough Bitcoin left for the free market if governments begin hoarding it for national reserves. As adoption picks up speed, Bitcoin may see a short-term surge to $150,000 and a long-term possibility of $500,000 plus per BTC as demand soars and supply contracts. Global central banks may be forced by this action to adopt Bitcoin or face financial oblivion. Will other countries follow the lead set by the United States? Ethereum is more than simply a cryptocurrency. It's a platform for financial services, smart contracts, and decentralized apps, DApps. Specifically, Ethereum-based smart contracts for government procurement are required by the executive order. Federal research on the application of Ethereum in finance and banking. Ethereum ETFs were expedited in order to draw in institutional investors. Ethereum will serve as the operating system for decentralized finance in the new financial order, much like Microsoft Windows does for software. Ethereum-based financial services, DeFi, will flourish once regulations are clear. Banks may integrate Ethereum-based payments and loans. Additionally, stock markets are settling trades on Ethereum's blockchain, and stablecoins based on Ethereum are increasingly being chosen over CBDCs. Since switching to proof of stake, POS, Ethereum's supply has already decreased, resulting in scarcity. Now that institutional money is pouring in, Ethereum might see $5,000 ETH in a matter of months. Additionally, $10,000 ETH if Ethereum becomes the global standard for smart contracts, and $25,000 ETH if usage spreads globally. Ethereum's position as the foundation of the digital economy is solidified by the executive order. Because of its legal dispute with the SEC, XRP has been subject to regulatory ambiguity for years. The fight is over. The presidential order has formally made it possible for banks to use XRP. The primary advantage of XRP is its speedy and nearly costless transaction settlement, which is unmatched by more established financial systems like SWIFT. Despite processing over $5 trillion in transactions every day, the SWIFT system is antiquated, costly, and slow. Instant cross-border payments, fractional cent transaction fees, and the removal of currency translation delays are all made possible by XRP's technology. The United States is paving the way for a global payments revolution by incorporating XRP into the financial system. If banks begin using XRP's network in place of SWIFT, we may see $5 XRP in the near future and $10, $15 XRP as acceptance grows around the world. XRP isn't a speculative asset anymore. It is currently a piece of financial infrastructure supported by the government. Compared to Visa, 24,000 TPS, and MasterCard, 5,000 TPS, Solana can process up to 65,000 transactions per second, TPS. For DeFi applications and real-world payments, this makes it the fastest blockchain. According to the presidential directive, Solana is a crucial blockchain for infrastructure in tokenized real estate markets. Digital identity initiatives of the government. Rapid, instantaneous payment methods. This implies that governments may soon employ Solana to digitize assets like bonds and real estate. For almost instantaneous settlement, it might be included into banking systems. Solana has the potential to serve as the foundation for ownership and trading systems based on NFT. With institutional adoption and government support, Solana's price may reach $250 SOL in a matter of months, and if banks and corporations begin to use it, it might reach $500 SOL as it becomes the norm for digital finance. It might be $1,000 SOL. The message is unmistakable. Solana is the future of fast financial transactions, not simply another blockchain. Don't get me wrong, banks are scared. Traditional banks have dominated the money supply for centuries. They have set rules for loans, fees, and who is allowed to use financial services. Now that the federal government has endorsed Bitcoin, Ethereum, XRP, and Solana, the banks must decide whether to accept crypto and adapt or to resist and fall behind. How will banks change, then? Additional banks that provide crypto custody. Anticipate the launch of Bitcoin and Ethereum custody services by major U.S. institutions. Banks will gradually abandon SWIFT in favor of XRP's instant settlement network with XRP-powered cross-border transactions. Banks will begin to offer loans backed by Ethereum and Bitcoin as crypto lending becomes the norm. A new decentralized financial system is emerging while the old guard in finance is falling apart. This presidential order declares that the financial world will never be the same again, which is more than just a victory for cryptocurrency investors. The United States is taking a risk by attempting to control digital assets. And for those who are aware of what is going on, this is the greatest chance of our lives. Solana, XRP, Ethereum, and Bitcoin. These aren't merely financial investments. These serve as a new financial systems foundation. Are you prepared, I wonder? Due to the fact that the future does not wait. It is the property of those who take it. So, if you found this information valuable, make sure to subscribe to the channel and hit that thumbs up button. It really helps us grow and bring you more high quality content. And don't forget to share this video with your family and friends so they can stay ahead of the game, too. Thanks for watching, and I'll see you in the next video.